Good morning, one and all. I hope you are doing well. I hope you had a great weekend, and welcome to this morning's video. So this morning, I have 3 pairs on watch. As I said in a previous video, I'm struggling to make videos a little bit at the moment just because of my commitments in my personal life. So I won't be maybe quite as frequent as I used to be, but I'm going to try to make a video when I have the time to do so as often as possible. So it is what it is. It's just things that I've got to deal with at the minute, got to overcome, got to get done. But without further ado, what I have on watch today is dollar CAD, natural gas, and pound Kiwi. So my favourite of the bunch, I would think, is dollar CAD, and we shall break this down on the higher time frames. So the narrative, as I see it, why I'm looking at this, we do have this high above there, okay, which this high and this high near miss too, but I'm not concerned about that at the minute because that's a bit too far away if you look at where price is at the moment. Okay, so that's not necessarily relevant at this moment in time. It may well be relevant in the future, but not every near miss has to be filled straight away. What we have here is we have this standout high here, which was, I believe, a monthly high. Okay, and we tap into that. We have the near miss to the area. That's the first clue that might be the area that we respond to. Okay, we also near miss to this high as well, but this is the origin of all of this move. Okay, so we near miss to the high, then we tap into it by way of a reversal structure. We have this 1, 2, 3. We wick above, spike out all the orders, and then move to the downside. Okay, we then impulsively smash through the base of this structure and then come back up in quite a corrective manner. Okay, so we don't move up. Okay, there was a low here, but if you look at how we responded to that area, we didn't respond impulsively. We've responded like that. Okay, suggesting to me that this was just a bit of profit taking after we hit this low and maybe that low as well. After such a big move down, there's going to be profit taking. Okay, many people that have ridden, if you think of this as a long train journey, okay, after a long train journey, when price finally stops at the first station, there's going to be a lot of people getting off. Okay, and that's how I'm seeing that at the minute. So if we just take all those squiggles off the chart, so then we zoom in, you can see that we have these highs here. Okay, so we pull back into this area, we near miss to this high, okay, but there is a high sat just above it, which is actually, okay, if we just look at this high here, it formed above this low here, okay, so I'm seeing this is potentially just a bit of a running channel, which makes this the origin of the move, okay, where we will likely gravitate back towards, okay, and the clue as well. Don't know why my voice always does this when I make a video. It doesn't do it in my personal life, but for some reason when I make a video it does. The other clue was the fact that we tapped into this area here, rather than if we'd have near missed to this area and come down like this, it was perhaps more likely that we would go. But when we tap into it and price doesn't commit, that's implying to me that there was not enough liquidity at this area and that we will likely come back up to tap into that area, which we've done kind of by this reversal structure here. We have this, okay, we have a bit of a move there, then we have the middle section, then we tap into the area. We also have a little mini 3-touch there, okay, so we have the first drive, little mini middle section there, bit of a spike there. I believe that was caused by, I think, FOMC or something, I'm not sure, but then we tap into the area, then we push down, and since we've pushed down from that area, we have, if you look at the daily close we have, this is quite important as well, because we have this, we have this rejection here. So what just happened there on the lower time frames caused price on the daily chart to reject not just those areas, but also caused it to reject the base of this structure. Okay, so I'm seeing this now as we've tapped all the liquidity out there, and we've also retested the back end of all of this structure. We've got a bit of a wick below it, so that makes it more likely that we will correct for a period of time before dropping off, versus if this had a more solid-bodied, heavy-bodied close. Okay, so then we analyze the price action. So price has no business coming back up here now because it's washed out all of the liquidity. That little correction there formed above all of this, and I think it just about tapped into the low of that, not quite, but we've impulsively moved down from these areas, suggesting that we've washed out enough of the liquidity. If we just zoom down, you can see that we have the impulsive move down. There were a couple of little tight corrections on the way. I believe they were on the prevalent on the 5-minute chart. That is important because I'm trying to ascertain whether the bigger players have been stacking orders on the way down. So those little corrections that you see there imply that there was a little bit of stacking of orders, especially as they're kind of flat and tight. So that also adds weight to the theory that, you know, this may be ready to move to the downside. And you can see that we potentially have a bit of a reversal structure leading up to there. As I said, these trend lines, which I disregarded for a while for reasons which would take me too long to explain, they do often point the way to where the liquidity is, especially when we have a sharp move up and a sharp move down, followed by, which happens to be the retest at the back end of the previous low, okay? If people believe that what was previously support becomes resistance once it's broken below, then many of these people, once we broke below this low here, would have put their stop loss above there, believing that this was now resistance, okay? So, and the clue that may be the case is this little reversal structure and the near miss to that high. So what I'm going to be looking for in this instance is the following. Okay, because of the proportions of this, because of the impulse down and how wide this is relative to the move down which has preceded it, there isn't a chance that this becomes too voluminous. I do love that word. And we end up tapping into that again and then moving to the downside. So I'm aware of that. So that's why I'm not looking for a risk entry from here. But what I will be looking for is I'll be looking for a 1 hour impulse down. If we tap into the area, a 1 hour impulse down. And now that we've got this kind of, we may push down a little bit more, a bit lower to give us more of a middle section to then push up into that area. But if we tap into that area, I'll be looking for a 1 hour impulse down, followed by a 5-minute or a 15-minute continuation. And then I'll be able to manage it down to this low, something in the region of 4.5%. And then my target would be this low here, which would give me something in the region of 10%. And then I would measure it from the range. If I can get that on the chart, I'd measure from the range there to there. I'd set a take profit at the 90% area where price can often pull back deeply, even if it's going to continue in the forecasted direction, especially when we have a sharp move set just below it. And I would trail my stop loss at the same time. Okay, so that is dollar CAD. Okay, saving that. Natural gas USD. So natural gas USD, if we just zoom out. So natural gas USD, if we just zoom out on the higher time frames, and I just put something on the chart which is not here at the minute, but which I was aware of all the same. Okay, so just doing this on the fly. So we have on the higher time frames, we have this high here. We near miss to it. We have a near miss to that high. So at some point, we'll likely tap into that area, break above, catch people on the wrong side of the market and move down. Don't normally see a break above by this amount, but that I'm sure that had a lot to do with the fundamentals going on surrounding the war in Ukraine and so forth. So we tried to commit here, we failed. Then price broke above. We have this kind of reversal structure there. Then we push to the downside. We have the impulse correction continuation. And I'm just seeing this, as I explained last week, you know, normally we would see an impulse down, a correction, and then probably a third wave. So we have the phase 1, phase 2, phase 3. Usually the phase 3 would be of a similar length to the phase 1. Okay. But when we're sat at an all-time low there, okay, that would put us into negative equity, which doesn't really make a lot of fundamental sense. So what it seemed likely to me quite a while ago is that this would end up being a reversal structure where we would get the near miss there to that low. We then tap into that low to give us that, and then we push up from there. And what happens thereafter remains to be seen. Okay. We don't need to know what's going to happen next to make money. So I'm just seeing this as a potential move down, because if you look at this, if we were to plot a trend line there, we kind of have the parallel nature to it, which we often see. I'm seeing this as a phase 1, phase 2, phase 3 into this area to take out the all-time low to complete the reversal structure. So given that we're on the weekly chart, I'm just trying to play the last bit of that move, if that's what's going to happen. If we look on the daily chart, okay, let's just zoom in a touch and get that off the chart. So on the daily chart, you can see this is a little bit more clearly. So one of the things that I touched on last week is that this high, this push down kind of happened from nowhere. It didn't really respond from anything. But what I've noticed is that when we're creating these reversal structures, often, given that they're often parallel, okay, and you can see that's pretty much parallel with that, they do often, if we're going to move down to complete the third touch, often we'll have an impulse down that kind of responds from nowhere. So I'm not too worried about that, because that is in keeping with what happens when we have these reversal structures, okay? It would have been better if we had responded from an area of value on the left when this move down happened, but nothing happens perfectly, okay? This is trading. It's an imperfect market. You can see here that we have this high here. Okay, we have a high here, which happens to be the retest at the back end of this, which is more clear on the 4-hour chart, and crucially, it actually misses it. So it misses the previous low. Okay, so we have more reason to push up to that area. We also have, which will also be more clear on the 4-hour chart, we have a 1, 2, 3, so a reversal structure leading into that area where the second touch actually misses this area. And I'm going to drill down now because it is actually a bit clearer on the 4-hour chart. So you can see we have this structure here, okay, and the origin of all of that is there. If we zoom right in, I believe that we ever slightly narrowly miss this sharp move here, where there's likely liquidity, and that is the stronger magnet, the origin of all of this move. Okay, so once we impulsively dropped out, price started correcting here. Okay, so that's likely where we'll gravitate back towards. So I'm just seeing this as a potential. I mean, these expanding patterns can act as reversals or continuations, okay, in the right area. But I'm seeing this as a potential reversal structure, okay, especially given as this low didn't get to this low. Okay, so if this is a move to push higher, this hasn't really responded from anything. Okay, so I'm not at this moment in time, unless we get some kind of continuation up here, I'm not seeing this as a move to push higher, because this hasn't really come from anywhere. Okay, what I'm seeing this as at this moment in time is an expanding pattern, a reversal structure leading into an area of value where there's likely liquidity sat above. Okay, we do have to be mindful of, if we just zoom down and you look at this on the 15-minute chart, there is a potential, what I was just saying about the long, we do have. So this little low here could act as the base of a potential structure like that, which taps into that. And then we get more of this or more of that, okay, which taps into that. That would be what I would anticipate if we're going to move to the upside. But what I would anticipate if we move to the downside is a break below the area of value, okay, and then we will be back below here as well by default. I'll be looking for, what's happened here? Okay, all this stuff's moved because of all the stuff I put on the chart. So I'll be looking for a break back below the area of value, followed by a 5-minute or a 15-minute continuation. And then I would look to get short either, depending on which one it was, on the break of the flag or within it. And then I'll be able to manage it. I know that looks a bit odd, but that's because the pip range is different with natural gas, and 10 pips is the minimum that we go to. I know it says 9.9 in there, but this is just a rough measurement. So we'd have 1.46 to the low. And then in this instance, because I wouldn't be able to get 5% to that low, okay, with the 10 pip stop, I would actually set a take profit here, which should, I believe, give me bang on 5%, which it does. I've done all this at the weekend. So I would set a take profit at that low while simultaneously trailing my stop loss. Okay, and that's what I'm going to be looking for from natural gas. Right, so we just save that and move on. So I have an alert set just below the area of value to see if we push back down beneath it. And if we don't, I don't need to check this trade. So that's how you can keep your trading emotion free, or as emotion free as possible. Just set and forget. Okay, you don't need to keep checking the charts every 5 minutes. So pound Kiwi is a bit of an interesting one because there's a potential short play here as well. Okay, so how I'm seeing it at the minute, the reason I'm looking for a long is because we have this, and I've only got 5 minutes left. So on the higher time frames, okay, on the higher time frames, we've tapped into this high here, this monthly high, but we wick towards it, okay? And with such a significant high, it's usually the case that we would break above before moving to the downside. So that gives me reason to believe, especially if you look at how much we've retraced here at the minute, that we may be coming up to take out this wick. This is what we call a wick fill, okay? Especially if you look at this, because, okay, so we have this structure. We had this structure, reversal structure, which broke above here, and as I said, got to that area but did not break above it. It wicked to and not through it, and then we broke below this low. And look at the momentum we've had to the upside since. Especially look at this weekly close here with this very bullish candle. We have a big wick below it, suggesting that price came down, grabbed a load of liquidity, and then closed up here, which means that if it grabbed a load of liquidity, this might be a move to the upside to give us that, and to give us that reversal structure where this becomes the middle section, because this move down was more corrective than this move up which preceded it. Okay, if that makes sense. So as I zoom in, I've got to speed up a little bit. So that's what I'm seeing at this moment in time. And it's also, if we just drill down, you can see there we have that kind of we have the two low tests. That's also another clue. We tap into that area and we get two low test candles, two washouts of liquidity, followed by the bullish momentum. Okay, so I am mindful of the fact that we do have a potential reversal structure here, but it's not normally the case that we get an impulse down like this, a sideways correction which is that wide, and then we get a little reversal structure. Especially, just to touch on it, if you look here, this is a key detail, the second touch of this structure actually taps this area and price does not find enough liquidity to send it to the downside. Usually the second touch of a reversal structure to the downside would usually miss this area, although not always. I am mindful of the fact that we have had a heavy 4-hour candle here, so I'm using more weighted a more weighted entry type. One thing I am seeing though, if we just look at this, price is responding very well to structure from the down to the upside. Okay, so we break below here, move to the upside. We have this correction, which I don't like, which is not typical. But then we start moving by way of little reversal structures, which tap into the sharp moves. Okay, we have it there. We have a little 1, 2, 3 here, which taps into this. We have that sharp move there. We tap into that by way of a reversal structure. We push up. We then have this low. We tap into that by way of a reversal structure, and then we move to the upside. It's responding very well to structure. So with all of that in mind, what I'm going to be looking for, and you do have to drill down a little bit on this one, okay, we have the same thing again. We have a 1, 2, where this low breaks below that one, but doesn't tap into this little footprint here, okay. So I'm seeing this as a potential 1, 2, 3, where this is the middle section, and then we potentially move up from there. Okay, as I said, trend lines often point the way as to where the liquidity is, so this might be pointing the way to the liquidity being there, especially as this move was sharper than this one. Okay, we may be tapping into this area, but at this moment in time I'm looking at this as the area of value, and what I'll be looking for from this pair is the following. I'm looking for a push up from this area followed by a 15-minute continuation, not a 5-minute continuation for all of the variables considered, because we are at this high, because we potentially have a reversal structure to the downside, and also because if we just measure it, we measure this range, okay, that low there is less than 50% of this range away. So when that's the case, I always wait for a 15-minute continuation, not a 5-minute, just in case I end up being tagged out, price moves down to there, gives us this, and then moves up to the upside from there. So I'm waiting for slightly more deliberacy, and then what I'd be able to do is I would manage it. I'd be able to manage it up to this high for something in the region of 2.5%, and then my target in this instance would be up there, and I would obviously mechanically manage this again. So I've got a Google Calendar reminder to remind me to check this at 8 o'clock, I believe it is, just to see how the land lies. And we'll see what happens. And that is it, folks. I'll see you again in the next video. I hope you've enjoyed this one. I'll see you again likely tomorrow.